You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block, everyone's favorite. I hope it's yours. It certainly is mine. Bi-weekly source for all things options related. A little bit of options wit, a little bit of wisdom, some unusual activity, some strategery, some around the block peering into the future, and all sorts of your questions. Mix them all up together, and you have the delicious cocktail that is the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Coming to you one more time here in 2016 with the old option block. And, of course, if you're saying to yourself, oh, I missed some shows this year, I missed some of your episodes here in 2016, well, don't worry, we got you covered. Check out all the archives there, wherever you find your favorite podcast programs. You can, of course, always go to our site, theoptionsinsider.com. It's all there for your streaming pleasure, as well as, of course, iTunes, TuneIn, Stitcher, iHeartRadio, all that fun stuff. You can get all of your favorite programs whenever you want, whenever you want. We don't judge. You want to listen in Reykjavik at 2 a.m., we've got you covered. And, of course, you can always find us via the app stores as well, iOS, Android, and the beloved Fire OS. And however you listen, whether it's those of you who can join us live, like you're right today, 3 o'clock here on Thursday, December 29th, or for those of you who join us after the fact, make sure you hit us up with those questions, those comments. We love to hear from you guys. And coming to you one last time here in 2016, my cohorts, my partners in crime on the old Option Block All-Star panel. Let's go in order of reverse proximity, so all the way out to the kingdom, the Duchy of Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the Option Block program one last time here for 2016.
This year flew by.
It does. It doesn't seem at all like the year should be done, does it?
I mean, I could swear we were just talking about volatility is exploding and China's going bankrupt and blah, and then it wasn't. And then it just stopped. It was all just a dream.
It never happened.
It was 1850 and sayonara Charlie.
Yeah, you look at the S&P right now, it never happened clearly. It was all just a horrible, horrible nightmare. So yeah, who knows what's in store for us as we kick off the new year, 2017. Everyone's going to be waiting with bated breath for that first trading session of the new year. See if we roar out of the gate like we did again last year. And getting a little bit closer to home, we make a stop over there in scenic and lovely St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, greetings to you as well one last time here for 2016.
Gosh, we've been doing this show for 500 some odd episodes, and just seems like yesterday we were doing this for, I think it was 2010, I believe, the year in review for 2010. Now it's 2016 already. Option block has come a long way, baby. Yeah,
it has. It has evolved many times, many different iterations, many different co-hosts and cohorts on the old program. But it's been fun. It's been fun to have a long-running thoroughbred here on the network. And since we're going to tighten that circle up a little more, get all the way here into the studios here in Chicago, where sitting next to me, I am joined by a first-timer on this program, not on the network. He is Kevin Ott, the co-president over there at Lightspeed Trading. Kevin, welcome on here to the Option Block program.
Thanks, Mark. Good to be here. nice short walk over here. I'm not coming in from St. Charles
Yeah, we didn't give
Maine
you
or these other locations, but
didn't give you a rough commute. Could have given you a little bit better weather, but I guess it's not as bad as it was a week or two ago out here, where it was
No.
colder than Mars, I believe, is the word the meteorologists used. Really quickly here at the top of the show, before we dive into the trading block, you've been on our interview program before and some of our other stuff on the network, but never on this program before. So for the listeners of this program, give them an overview. What the heck is Lightspeed, and what is it you guys do?
Sure. Name of our firm is Lightspeed Trading. We're a online broker. We provide the technology and brokerage services for active traders. Really, that's our niche. The traders that we provide are the active variety. They have sophisticated needs. They aren't always the most active, but they do require sophisticated tools. And really, anybody who's looking to control their experience in the trading of equities, options, as well as futures.
And if listeners want to go check out your stuff while we're doing the show here, where should they go? What should they do?
Lightspeedtrading.com.
There you go. Easy place to find it. Lightspeedtrading.com. All right, with the team assembled plus one, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, and welcome to the trading block. This is indeed the portion of the program where we break down what was moving, what was shaking in today's market activity. We are coming into the end of the year here, so a bit of a quiet period, and that's pretty much what we got here today, at least to wrap up the day here, with most of the major indices settling out, effectively unched on the day. S&P almost literally unched, I think, off a handle. That's about as close to unched, or as close to as you're going to get these days. Qs and Dow moving similarly small percentages. Did see a little bit of an inhale going on over there in VIX cash land, back up over the much ballyhoo 12 handle, indeed over the 13 handle, up about a half a point today to get about 13, right around 13 and a half, 13.4 right now over there in VIX cash land. So a little bit of vol trickling back in. Maybe some people remembering the playbook from last year and saying, oh yeah, I remember we actually had a crazy start to the year. Maybe I want to put a little bit of vol in my back pocket for a rainy day or maybe a snowy trading day in January. We shall see. Let's kick it off. Kevin, since you're our guest here, I'll give you the dubious honor, the pride of place of going first. Is there anything in today's activity or maybe earlier this week that caught your eye, or maybe some stuff that's really been lighting it up over there on the Lightspeed platform that's kind of been catching your eye of late? Whatever it is been catching your eye, have at it, sir. Let us know.
Sure, and I think it's the lack of things catching your eye, or the looking at the tea leaves to try to read too much into the market. We've got a low volume week going on. We did have a little bit of a increase in volatility, but generally speaking, volatility has been non-existent. It's frequently a time where traders may overtrade, may overthink. So there's a lot of overreading of things. Sit and watch your TV shows. Might be a good time to catch up on some reading, spend some time with the family, and watch the markets with a grain of salt. And like we remember at the start of 2016, we stepped up with some volatility, some events that were a little exciting. So look back at the year in reflection and get ready for 2017.
Let me ask you this, because some of our listeners may not know, of course, Lightspeed kind of spun off of the deal there with LiveVol, breaking off the broker-dealer into your portion, while the data portion kind of remaining there with the SIBO. So, and then LiveVol initially in its core always really focused on kind of the higher-end guy, whether it's a super active retail guy or in many cases kind of the active professional type trader. So I'm kind of curious, you clearly have a lot of that clientele over there at Lightspeed. What is their product of choice these days? What is the thing that's really lighting up the Lightspeed platform? Are they mostly, I don't know, VIX options guys? Are they SPX or SPY options? What is it that the kind of the hardcore over there at Lightspeed? What are they slinging day to day over there on your platform?
Sure. On our flagship platform called Lightspeed Trader, you mentioned LiveVol, but Lightspeed Trader is our bread and butter. We trade stocks and options on that platform. Primarily clients with an active mentality, looking at it day for day, really just looking at what's moving, what's giving them a good return just on a day-over-day basis. The LiveVol acquisition, really we acquired those accounts, and we now offer the LiveVol X, the LiveVol product with execution capabilities, has given us a little bit different flavor of a customer. Like I said, Lightspeed Trader's a fantastic trading platform, great executions, speed. The live vol product is more geared toward the analytics. It's got deep historic data access and really more geared toward somebody who's looking at a little bit different of a strategy. So it's tough to your question to say what is the strategy of choice. It's all over the place.
Like we have a lot of brokers come in here, and they're usually like, they're always singing the praises of the usual suspects, the Apples, the Spies, the Googles, the Facebooks. I was curious if your platform is the same, or if there's maybe a more esoteric product that they were really into. Maybe they're SPX, maybe they're VIX, or something else. Sounds like you guys have kind of all over the place.
I think that's a good way to say it. We're all over the place, but the big names get most of the volume, and that's where people are going to be trading.
That's where the action is, regardless of where you look. That's where the action is. Speaking of action, Mr. Rock Lobster, you people out there in your pit chat are always looking for the action in different places. What if anything was catching their eye and indeed yours today?
We're having basically a reduced week. We're not putting on new trades this week. We looked at what I'm finding strange is the roll up in VIX. Not so much strange. I heard from some floor traders that there was a lot of reversal conversion action going on in the January cycle. I'm not quite sure why. Actually, the point where clearing firms wouldn't let the market makers put on any more conversions. So I don't know what kind of balance problems that was causing. The only thing I'm thinking is maybe somebody's making a big bet on like a change in short-term interest rates, something that is not expected. So maybe something comes out of the Fed next week. They kind of already said they're raising rates, but the reality is I think the January future in VIX is, I'm going to say 1485. It's relatively expensive to where we have been trading. I mean, I know we had that little bit of a sell-off yesterday, so it feels like, considering we have a 3-day weekend coming up, like the market seems to be pricing some volatility that's not there right now, but could be there next week. So I'm looking at probably tomorrow. I'll add a little bit to fade this, but also if the market takes a dump, I'll own some SPY puts too. But it's kind of, I usually like in this type of action to sort of the rubber band stretching with volatility. It seems like it got sold kind of aggressively hard into the end of last week prior to Christmas. And then now it's almost like they're letting it out again, and we'll see if it holds up. I mean, we were kind of coasting along at 11-12 VIX, and I don't think we've had enough movement to shock it too much from there. Considering what you say today, the SPY moved one handle, or the SPX moved one handle. That's the SPX one handle, not the SPY one handle. So weird. You're kind of seeing a little bit of the Trump election unwind. They're selling the banks back a little bit. Technology's a little flattish. Gold is making a bounce. I'm sure Tosaw will be happy about that, and to some degree, but it feels like it's eyeballing that 1,000 level, and it just does not want to go below there. So anyway, I think there's just a combination of things like that that are, there's really nothing going on. There's not a lot of liquidity, and things are kind of getting stretched. And I believe it'll be an opportunity to sell some vol because we've got earnings coming out. The election's coming up, which will be it will be the end of a vol event, essentially being, there's an election and now there isn't. So, and it's not historically, it's never been huge, but we have seen some movement. In 2012, we had a lot. We had all that fiscal cliff stuff, do you remember? And then we ended up having 2013, I think the SPX was up 30% or something like that. So if we could see that kind of action again, if you see sort of that government, I don't know, it feels like there's the potential for that kind of move or some decent moves. But I think at this point, the rumor has to actually start to play out a little bit. So that's right. That's what we're looking at. I think it's a bit of a vol selling opportunity, but we shall see.
It is kind of funny to watch, and we'll probably get into this more on vol views tomorrow. Obviously, we brought it up last week, and there was that impressive discrepancy, like you just mentioned, between the cash and the front month Jan contract. I think it was like about 2.5 handles when we last did the show. Obviously, something's got to move. The cash has got to move for the front month future. That discrepancy right now, we're at about 1.3 handles or so out there. So clearly, the cash is playing the catch up right now. We'll see if that's the case tomorrow. And all this funky reversal conversion stuff. I think we'll have to analyze that a little bit tomorrow too on vol view. So stay tuned for that, listeners. I know a lot of you guys like that program as well. So stay tuned for that tomorrow. Coming at you live, noon Central on Friday. And last but certainly not least, heading out to that paradise on earth, Mr. Good old St. Charles, where Uncle Mike joins us. Uncle Mike, what was catching your eye? There was a lot lighting it up on the commodity side of the fence. Mr. Rock Lobster mentioned gold. I know you're also a big fan of all things crude. You saw crude actually dropping for the first time in a while. I believe it's been about 9 sessions or so since the crude bulls took their foot off the gas pedal there a little bit. It has been kind of fascinating to watch what's been going on out there. We've mentioned on this show even kind of just the continued rally in crude and also the continued implosion out there in all things crude volatility related. In fact, if you pull up some of our favorite crude vol indicators, OIV still hovering south of that 30 handle. We were saying on recent shows, it seemed like 35 to 37 was a good floor for the OIV OVX, and here we are, fast forward a week or so, and they're well shy of the 30 handle. So maybe this is the time for premium fans out there, premium buyers, to be piling into crude. What have you been up to? What's been going on out there? You still blasting away on those XLE 30 puts?
If I could, I would. Let me tell you, I'd love to sell some XLE 30 puts by all means. But no, a bunch of things are going. There's a lot of things that are in the mix or getting ready to happen, it seems like, but nothing's really happening yet. The big news that I saw out of today was that Trump expelled, I believe it was 35 diplomats President Obama expelled 35 diplomats from Russia because there's believed to be some hacking going on. And also saying that there will be other actions that'll be taken, but they won't be publicized before they happen. A lot of that came out probably around 1 o'clock today. The market had a little bit of a bump up, so apparently the market feels that that we're in a little bit more control by taking some control of the situation, and the market liked that. But in reality, it only moved 3 points. So by saying the market really liked it, shows how slow today really was in terms of market action. So I think that's something that's going to be in the news in the next coming weeks, just because of the fact that with Trump recently making announcements and how like he wants to work with Putin and what's going on with that. I don't think we've heard the last of that. And I think in the around the block segment, maybe I'm kind of getting a little bit ahead of myself here, but I think that's something that I'm definitely going to be watching over the course of the next couple of weeks, is just the announcements as to what's going on with the Russia relationships. OPEC nations, they're getting ready to actually cut production for the first time, and I forget how many years, and the first time in years. So I think that'll definitely, what I'm waiting to see is if that news is already baked in and it's going to be a buy the rumor, sell the news type of thing with both crude oil and natural gas, or if it actually does happen, the market might say, and the market meaning the crude nat gas market saying, holy cow, they're actually going to do it. And then all of a sudden we see the prices come up. That's another thing that I'm going to be watching in the next coming weeks. The thing that also kind of stood out to me today, if you look at FXI, the China ETF, that was actually up probably close to 1%. It's up 45 cents on the day, over 1%. That's on a day when the market was relatively flat. So that's another thing that's as of to take note of. And overall, I think that I'm in agreement with Kevin in that there's there's a lot of stuff that you really have the ability to overanalyze in a market like this. For what I'm doing and what I would recommend a lot of our listeners do is just play this news in preparation for the upcoming new year, as opposed to trying to make trades this week. I'm not saying don't trade, but what I am saying is really have more of a focus on what's going to be happening next week and next month, because a lot of the big money is relaxing right now at the Hamptons, I'm willing to bet, or hanging out with the Rock Lobster at his ice rink that I hear is having some troubles.
All right, thank you for that, Uncle Mike.
We don't mention the ice rink right now. It is a bone of contention. Umbrage.
You're just going to cause umbrage, Mike. What are you doing? You know, you're bringing up the man's lone misery. He moved to Maine so he could have his own ice rink, and the weather is not obliging him. He should have moved to Chicago, where a week or two ago he could have had all the ice rink he wanted outside. A little warmer these days, but still maybe 30 to 40 degrees warmer, but still, not maybe as ice rinky as it was. But with that, let's keep on rolling into my own personal favorite segment, of course, except for the mail block. It is indeed the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the Odd Block, the portion of the program where we break down the weird, the wild, the bizarre, and sometimes just head-scratching portion of the old options market. I'm going to kick it off with a few newcomers here. Well, one newcomer at least. I think maybe two newcomers. Well, let's call it 2 out of 3 newcomers this time. Let's kick it off here with newcomer number 1. This is Moblieye NV, ticker symbol MBLY. If you're wondering what the heck do they do, well, they're engaged in computer vision and machine learning. So maybe they are indeed making mobile eyeballs that can follow you around wherever you go. No, it's a good name. I like it. The ticker, of course, MBLY. Closing today, $38.44, up a whopping $3.42, or nearly 10% on the day. This name obviously lighting it up today. This name averages just a tick under 9,000 contracts a day. Today, really blowing the doors off to the tune of 41, nearly 42,000 contracts. Surprisingly even paper, given the fact that the underlying was so one-sided. It was 1.3 to 1 calls over puts, which is a surprising day like today. You'd think all the love, all the action would be in the calls, which is where our attention certainly was drawn today. And a day like this, an underlying gapping up 10%, you'd expect someone to be piling in to some previously at the money, now deep in the money calls. And that's pretty much what we saw. We saw the D's 30s lighten it up to the D's 36s expiring on the 30th. So these are the weeklies going up. We first noticed it, again, it's smaller volume today, so we're looking for more nuanced paper on a day like today. We first saw a couple hundred going up over there for $1 paper buying. As the day went on, we saw a total of about 1,000 going up on that strike, all on open interest of just 1,100 contracts. So one of the more active contracts out here from an open interest perspective, the other being the D's 39s with about 3,000 contracts open. It was pretty much people just piling into this before the big rally. That initial print actually looks fairly good because these things went out, as you might expect, at 235 bid. So not a bad little return on his investment for a few hours work. We again also saw paper going up all the way, all the call strikes, 37s, 37 halves, all did over 1,000 contracts, 38s, 1,200 of the 39s even lighting it up today. So optimistic paper was indeed flowing out here in good old Mobley. Looking back, Mobileye, I should say. Mobley is the ticker. Looking back at the year that was for a good old Mobileye, this thing has had an interesting run. Like a lot of the names we've seen this year, it kind of had some rough going back in the January, February timeframe, hitting a low back in the low 20s, actually, about 23.5 or so, before rallying pretty hard, getting up all the way over there to about 50 in about the late summer time frame, then getting its wings clipped a little bit again to where it is right now, right in the mid to now high 30 handle range. So Mr. Rock Lobster, this has been an interesting one to watch. Certainly a lot of volatility to be had out here
This thing's just gapping all over the place, up, down, left, right, and center. Sounds like our friends here were piling. You think this was opening paper? I got a feeling like today probably opened, or you think this was someone maybe scrambling to close out maybe an overly aggressive covered call there on the 36 handle?
You know what my spidey sense tells me, and you know how good that is, how accurate it is. I'm feeling this was a lot of opening paper. Somebody got some of those 36s for like 50 cents today, too. I mean, that's the days where you don't want to be a market maker, where you sell a bunch of options expiring tomorrow, and you sell stuff for 10 cents that ends up the day at like $1.50. And nothing is looking really good. So all the D's 30 calls, the D's 30 term, they bid all those things up. Bid. So there could be some short covering, but overall, I think it was a lot of opening paper, and I think the call buyers had it was a subject in our chat room. One of our clients is like, man, Moblieye, they are buying some calls in there. What's going on? So I don't know. Maybe they got something from Tesla. I guess Tesla stock's kind of newly resurgent a little bit. I heard that Elon Musk is on Trump's economic council. That guy doesn't miss a trick.
That guy, his name is involved in anything you can pretty much name.
You know what? You can say what you want about the stock price, but he seems to always be in the right place at the right time.
Whatever he pays his PR person, it is not enough.
Yes. They are good. If you want to be good at a job, just watch that guy. Okay. However, the Mobileye does do that. The self-driving car software and things like that. So it was a really hot stock. It's kind of pulled back a little bit, and obviously today it's at 9%. So I just think this is a day where the retail in the near term, we've seen a lot of people go to kind of the graveyard on some of this stuff, but not today. They kicked butt, took names, and made some money in the D's 30 cycle. That's what they did. No way around it.
All right, sir. Thank you for that. Moving on now to our next victim. This one's been on before. This is a good old JetBlue. Ticker symbol JBLU. This name averages, about 8,000 contracts a day. Today doing just a tick under 60,000. So lighting it up today here in good old JetBlue to the tune of 105-1 calls over puts. Of that nearly 60,000 contracts, 59,111 were in the calls. So this is what we're talking about, listeners, and we're talking about one-sided paper. And in particular, it wasn't a huge underlying move that really caused it. This name was only up about 0.5% today, or about 11 cents on the day. So it wasn't like this thing was rocking and rolling all day long that caused that. No, actually, it was pretty sizable, what looks like a roll that caught our eye. It was the Jan 22, February 23 diagonal/roll going up. Looks like paper selling the Jan and for 85 cents, buying the Feb on splits for 92.5 cents. Doing that, about when we first noticed it, at about 22,000 times, and let's see, actually a little bit less. About 22 on the Jans and about 24 total on the Feb. So that latter kind could be a little bit of Me Too paper piling in. They could have done it on a little bit of a ratio. Looking at the open interest here, about 28,000 contracts open on the Jan, and not really open on the Febs. So looks like our standard roll. Again, paper selling the Jan, so it looks like they're rolling out of an existing long into Feb, keeping that long party alive. Again, the underlying closing, breaking through the 22 strike today. So maybe our friend deciding today was the day to get out of his now at the money calls and roll on into a little bit of upside, and doing it not for even money, but for a pretty modest outlay. So all said and done, not the end of the world. Also saw some paper going up on the Feb 22s as well, about 11,000 there. Whether that's related or it's kind of hard to say it's not, because it's so much big call paper lighting it up out there today. But interesting stuff nonetheless. Looking back at the year that was here, for JetBlue. This thing has kind of been all over the place like a lot of other names, too. Unlike a lot of our names, it didn't hit its nadir in the Jan-Feb timeframe, but again, actually later in the year, in June, when it dropped down to a little bit shy of the 15 handle, down to the 14 3/4 or so, and then has slowly made its way back up here, fighting and clawing its way into the 20 handle range, into 22 today. So our friend here deciding, the party's been good, the call party at least, and deciding to keep that party going at least through Feb. Mr. Rocklobster, what's your take here? And do you think those Feb 22s, is that a related paper, or is that someone just deciding, hey, I want to get in on this party too?
But there was a little bit of a party with this paper. I looked back. The Jans they bought for like 65, 60 cents, something like that, about a month ago. I think they're just taking a little bit of dollars. They're looking at the pullback, saying, okay, I want to still be long the airlines, which I believe, by the way, is probably it's the cheapest. It must be a value trap because it's like the cheapest, backward-looking PE ratios almost anything around. I guess they're pricing. I think they're being priced like oil is going to go back to $75 or $80 a barrel or something. But anyway, be that as it may, somebody bought some Jans in this mid 60s. They're selling them for the mid 80s. They're doing the roll for even money, and they're taking their dollars and they're just moving to Feb. And I saw a lot of this type of paper last week where Jan's getting a little too close. The rally kind of stalled, and they want to get long, but they want to stay long, but they want to move the duration out, which ultimately I think if you buy calls, usually it's better to buy them longer term than shorter term because you have to be right twice to win money, to win money, but to win buying short-term calls. So that's what it looks like. And I think I think it's not quite a house money roll. They didn't get the full pop on it, but they collected 20 cents for the roll. So what the heck? They pocket 20 cents and they're still long. So I'm thinking that they have a little bit more to go.
And speaking of more to go, we got one more to go here on the old odd block. This is good old KGC. I don't think we've had this one on the odd block before. I'll have to go check and make sure. I don't know. Kevin, you guys have a lot of professional traders over there on Lightspeed. I'm guessing you guys probably don't sling a lot of options on KGC, a $3 gold stock. I'm just going out on a limb and saying that's probably the case. Would I be out on a limb with that, Kevin?
Without looking at the exact date, I can't be sure, but I think your gut's probably.
I think I'm taking a wild curveball on that. That's what we like to do here on the odd block sometimes, Kevin. We like to mix it up a little bit. Get someone. We can always do the Apples and the Facebooks and the Googles and the Vixes, but it's fun to kind of parse the tea leaves a little bit and get into some of the funkier names, like the aforementioned KGC. That is Kinross Gold Corporation. Closing today, a whopping $3.27. So if the Viceroy is out there listening, I do apologize. I know he's such a fan of trading options on such cheap names. We're going to proceed. Nonetheless, this is a name that averages about 6,000, actually nearly 7,000 contracts a day, doing about almost 23,000 today. A lot of action on the puts here today, to the tune of about 18 and change of that 22,000 coming up. On the dark side, on the put side, if you're asking us what was the put du jour out there in good old KGC today, it was the Jan 2.5 put. Yes, $2.50 put. We saw them lighten up the tape. First, about 16,000 lighting it up on one massive block over there on the SIBO for a whopping 4 cents. As the day went on, it's like a total of 18,000, so a couple thousand more piling in at the end of the day. This is all on some size open interest here, by the way, about 76,000 contracts open. This appears to be the old standard buy back your shorts for a nice 4 cent play here. If this 76,000 contracts, if this is all of them, then they got a lot more to buy. But either way, it seems like they were posting 6 cent bids, getting filled, and then some more for 4 cents. So they were lighting it up all over the place on these puts. Apparently not in a huge rush to get them back, but they want to get those back, which we kind of we tend to support here on the option block. We have a saying here on the show, Kevin, the pigs get fed and hogs get slaughtered. So if you're out there buying back your short puts, we can't really hold it against you. Oh, by the way, I forgot to ask this for you at the top of the show. We like to ask this of all of our brokers. It's something when we come on the show. It's kind of a thing we like to support here. What is your policy over there on Lightspeed with buying back short options? Do you guys charge full commission, like I say, if it gets down below a dime or a nickel, or do you have like some sort of graduated commission scale, or is it free? What do you guys do over there?
It's the same commission schedule as entering into the trade. We do pride ourselves on having low commissions. So we'll charge the same both ways rather than trying to make a little bit more on the front side.
No deals on getting people out when they have the short puts there. I'm just trying to put a little bird in your ear there as we're doing the show here. It's one of our favorite things to talk about here, closing out short puts. Since we're talking about closing out short puts, Mr. Rock Lobster, take us home on this one. You think this 76,000 is our friend here, and what do you think? If so, you think he's got a lot more to go here? It sounds like he does. Oh, by the way, before we even get to that, this thing has been all over the place, like a lot of our gold mining and gold names this year, hitting its peak back in the summertime, right around looks like about the 5.5, close to 6 level, and then of course getting its legs chopped out again in the last few months here, hovering down to the 3 handle yet again. Mr. Rocklaps, take us home. You think we got more puts to go here in KGC?
This is one of those ones, Mark, where I'm looking at this and I like searching for the entry points for these. Actually, the live vol system is very nice for this because they have all the stored historical time and sales data. So it is a nice platform for doing that. The unintentional plug, but I use it every day. But anyway, but they traded these things 6 cents about like a month ago or something, and now they're trading them 4 and 6 cents again. So this just is I guess they're not trading it on a live vol platform, but it is a love your broker trade, meaning I'm going to do size 50,000 of these for 5 cents, and then I'm going to do 20,000 or something for 6 cents. It's a trade that let's just call it, this is a ball of confusion trade on a very slow day. Besides the sexiness of the Moblieye, this is the opposite. This is just a why, I guess, to me this is like a line in the sand put. They're just selling them because they think it's free money. And I don't see the purpose of this type of trade, but heck, somebody does see the purpose of this particular trade, but Mark, all I did was scratch my head several times and just give up on it.
So the odd block is 4. Speaking of scratching their heads, I see Kevin, he's not scratching his head. He got his ears perked up when you mentioned the open interest tools out there. I see that caught your interest there, Kevin.
Yeah, I'd be remiss if I didn't plug Lightspeed, where you can get that live vol product that Andrew was using.
And we do use it every day here. I'm using it right now. No, not even if you weren't in studio, I would still be using it here, Kevin. Even if they weren't sponsors of our Vol Views program, I would still be using it because that's what I've been using for ages. And you're right, the open interest graph is one of the things I like about it because I can just go find where a lot of this paper was open. You see that nice spike, you can kind of put 2 and 2 together. So it seems like, Mr. Rock Lobster, you're leaning with me. This guy's got a little bit more to do here.
Maybe 50,000 or so,
maybe.
And they're gonna,
just maybe. Just a few more.
A penny, and it's going to be for a penny.
Yeah. The man loves his broker. Hey, we can't poo-poo someone closing out a short like that. We shouldn't, just because it's for size. We recommend little guys do it. Big guys should do it too. Close out those shorts. Take them off. Why not? Love your broker. Broker needs some love too. It's the end of the year. They need to pay for their gifts, right, for their kids and stuff. And so there you go.
I just got the title for the show, Mark.
Love your broker.
Take off your shorts.
Oh, take off your shorts.
It's winter time in Chicago. Take off your shorts.
There we go. I love it. That's our title, and it is Thursday, so I think we'll proceed into Uncle Mike territory. It's time for a strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
Uncle Mike, I don't need a minion to whisper in my ear this time, because I got Kevin over here talking to me, telling me singing all the praises here of those things we like to call. This time of year, particularly, they're important. That is, of course, the old 1256 contracts, so all those SPX and those other type contracts that benefit, or provide benefits, I should say, to people who use them. So why don't you go ahead, Uncle Mike, and give our listeners a little bit of an overview of why those things are so interesting this time of year.
The glories of 1256. Well, what a 1256 contract is, typically they're found in index options or futures contracts. And the concept behind it is that, let's say that I were to buy a call option on Google, on Apple, on a stock, and I make $100 in profit on that when I close the option 2 weeks later. Well, with that, I would be taxed at the short-term tax rate. And the reason being it is short-term. And there's no tax benefit to it whatsoever. You're just simply taxed at that rate. Now, let's say that I do the same thing on SPX to where I make $100 profit over the course of 2 weeks, let's say. Well, in that case, then I am not taxed at 100% the short-term rate. I am taxed at 60% the long-term rate and then 40% the short-term rate. And that provides a little bit of tax relief if you have a difference between long-term and short-term capital gains, depending on what your tax bracket is and what the tax rates are, and all of that fun stuff. Now, with that being said, the reason why this is important, or why I'm bringing it up today, on the second to last trading day of the year, where tomorrow's or if you're listening to this and you're not live, the last trading day of the year, is that those contracts are marked to market every year at the end of the year. Now, if you're trading futures options or an SPX contract in an IRA, this is totally non-applicable to you. It means absolutely nothing to you. But if you're doing it in a taxable account, whether it's a corporate account, whether it's an individual account, a joint account, something to where you're going to pay taxes on year in, year out, then this is where you need to be aware. Tomorrow, at the close of trading, even if you hold that SPX contract or whatever 1256 contract you have into the new year, based on what the tax man saith, that contract is closed at the close of trading tomorrow. And what I mean by that is, let's say that you have a $100 profit on there, then you're going to pay taxes on that $100 profit, even if it's unrealized at the close of trading tomorrow. Now, that may or may not be a good thing, or it may or may not be a bad thing, depending on what your plan is for the trade itself, how well you're doing in the trade, what you want to do with it, or maybe it's acting as a hedge. And whether it's good or bad is irrelevant to my point. The point is that you will, according to the tax man, you will be marked to market based on tomorrow's close. So with that being said, have an idea of that and make your plans accordingly. Now, with that, even if you hold on to it into the new year, where it will be, let's say that the XYZ 1256 contract, a call or a put on the SPX, let's say, which is probably the most popular 1256 contract that we talk about on this show. Let's say that that contract itself is trading at $1. I know most SPX contracts don't trade that cheap, but if it's trading at $1 and you have that $100 in there and you bought it for 50 cents, then that $50 profit that you have is where it is. And then according to the tax man, you then open up that same trade. You closed it on the close of trading tomorrow, and then you open it at that same price of $1 on January 1st, not January 1st. I'm sorry. We start on January 3rd next year. So with that, just have an understanding of that going into the close tomorrow. I know a lot of our listeners do trade 1256 contracts, and have a plan for it in case you hold some of those contracts going into trading on December 30th, tomorrow.
Well said, sir. And all right, even though it's Thursday, it's the end of the year. I'll make sure some of you guys get your questions featured here on the program. We always have a good backlog of those. So without further ado, let's spend some time answering your questions in the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. This is indeed, like the man said, the portion of the show where you guys take the reins with your questions, your comments, your insights. Not just for us, but for your fellow Options Insider Radio listeners. Hit us up all the different ways on social media. We're at Options on Twitter, at Options on StockTwits, the Options Insider on Facebook. You can hit us up via our mobile app if you're listening there. If you're listening live in the Mixler, you want to hit us up with a question, feel free to do so, or do it the old-fashioned way, questions at theoptionsinsider.com. No shortage of ways for you guys to make yourselves heard, just like our first friend here, Trader Taz1. This is, Kevin, I think this one's right up your alley. So it's a good timing you're on the show today. He says, do I have a broker, or we have a broker recommendation for someone who is new to options? And he has a corollary, though, which I think is kind of interesting, and that's why I wanted to pick your brain on this one. Maybe with a cash account, since I don't want to do margin. The latter part of that kind of caught my eye. So again, as a broker, I always thought that they pretty much went hand in hand, unless you're talking like an IRA 401k. I don't know of a scenario where you could do an options account without a margin account. But that said, you're the broker here on the panel, so I'd be curious on your thoughts on that. Do you guys even allow that over there at Lightspeed? And then B, you guys, I know you tend to cater to a more, higher end professional type clientele. What do you have to say to someone like Taz1 who's looking for a broker? He's looking for more of a newbie handholdy type of broker.
Thanks, Mark. Well, Trader Taz1, I'm going to make a surprising statement as a broker who makes money on commissions and opening accounts. I don't think my firm would be a good fit for a newbie trader. I do have equity traders who are getting started on options trading, so that's type of client that we would that my firm would be a good fit for. But if you're looking for a lot of hand-holding, we probably aren't the best place. Although I must say that there are educators and other providers that we do partner with that do provide that service of educating you, and then we provide the brokerage with the same tools that we give our active traders. So a little bit of best of both worlds. Now, the exact statement for a cash account versus margin account to trade options. Certain strategies you can do in a cash account. Other strategies, you need a margin account. So depending on what you want to do, are you looking for just a vanilla strategy? You might be okay in a cash account. But if you're looking to start and expand on what you can do, margin account might be the way to go. Margin account, not my firm, but other brokers, the minimum, Reg T minimum is $2,000. It's not, it's a little bit of money, but not a lot if you're looking to take this seriously.
Yeah, so most brokers I've seen, whenever you say I want to sign up for options, you hit that button. The first form they put up there is a margin form. It's kind of just part of the process. So I guess, and maybe you guys make it a little easier. I don't know, but I guess you could maybe opt out of that and then see what the brokers would allow you to do. But that to me has always been kind of part and parcel of the application process. You're right, you don't technically need it if you just want to buy a call, but they seem to just always include that with your approval for options. Okay, you need to apply for a margin account. I guess maybe the safest way to do it, maybe do it through an IRA or something like that, where that's already kind of margin free to begin with, and maybe start there. But yeah, interesting stuff. I like to see a broker being kind of upfront and forward, saying, hey, we're not maybe for you. In the old days when everyone was kind of grabbing everything they could, that people would be afraid to say that. But I'm glad you would step up and tell, what's his name? Taz. I like that. Taz1. He's a big fan of the Tasmanian Devil, maybe. I don't know. All right, let's move on to Yukoner. He's got a question here. A good one. A straight, this is obviously a popular strategy. We covered a lot in the odd block. Covered calls. He wants to know, are covered calls still a viable strategy? This goes back to what we were just talking about in a 401k these days. I don't care where you're doing them. Covered calls are interesting. These are obviously sometimes are more challenging than others for the old covered call. This would be one of them for a variety of reasons. You have straight up underlying like SPY and others that are just kind of racing to the moon. So if you are writing aggressive covered calls, you're going to be have to do a lot of rolling, which may not be your cup of tea. Or you may get your underlying called away, which maybe you don't want either. So that's a complication. When the underlying's in rally ho mode, people tend to take a dim view of covered calls, even though they can work well if you're pretty diligent. And then B, of course, volatility is on the lower end, shall we say, of the recent range, even though it has been ticking up of late. So you have to look a little bit farther between to find those good opportunities. Some people, they get so dead set on writing the covered calls, and they just have to force one every week or every quarter, every month, whatever their frequency is. And sometimes people don't realize maybe just not doing one is also an effective strategy. If you're not getting the reward for it, then maybe the covered call component isn't for you. Maybe instead you keep the underlying, or you do something else. But as long as you're getting the right reward for it, and again, that's what we talk about a lot here on the Odd Block. Some of the trades you profile are, shall we say, not getting the right reward when you're writing a covered call out 6 months for like 7 cents. Yeah, that's not a good reward scenario. I know, Uncle Mike, you like yourselves a good covered call, and you deal with a lot of 401k clients. What are your thoughts? Are covered calls still viable today?
With a covered call, I think that there is a spot for it. I think right now you have to be a little bit more of a stock picker. I don't think it's wise to just do them on the index at this stage of life. But there are stocks out there with which you can do them. At RCM, we have our triple income strategy to where we sell puts and we collect, and it's just the wheel strategy that we've talked about on the show 10 trillion times. But there are stocks out there that you can do it with. And you have to keep it limited, but you have to really have a good method of picking the stocks that not only have good geometry on the chart, good fundamentals, but also good covered call premium. And that takes time, it takes work, and it takes energy to do. So if you're willing to put that in, then by all means, it is out there. But if not, I know a great firm for you that can help you with that.
All right, let's squeeze in one more here for the end of the year. This is from JLN84. He says, or perhaps she, I bought a call on a major equity. I guess they don't want to disclose which equity it is. It's a secret. A major equity that is now in the money. What is my next step? Do I need to do something to get the stock? Well, he doesn't say what it is or what the name is or if it's about to expire or whatnot. I'm assuming he just bought a call and the underlying rallied past his strike, and he's like, what the heck do I do now? Well, the good part is you don't have to do much. You can just sit on it, and it will happen eventually. The nice automatic exercise thresholds, it's kind of nice. Kind of probably made your job a little bit easier, Kevin, these days. You probably don't get as many of these questions anymore because the thresholds are so tight now, a penny in the money. It used to be a nickel, and then there's a lot of wiggle room, and then even wider back in the day. And so there's a lot of question of, will I assign? Will I get assigned? Will I exercise? You had to make proactive steps. I mean, I don't know. You're the broker. How often do you get people, contacting you on expiration these days with either, counter exercise assignments or having to do something else? It's probably I'd imagine a pretty rare occurrence these days, I would think.
Yeah, it's definitely less so now that it's tighter on the automatic. Now it's more or less us making calls. Do you know you're going to be assigned?
Warning them.
Are you sure you want to be assigned? Do you have the equity in your account to take on a position of that size? So what turned into a small call strategy now turns into a significant portion of your equity in your account.
Interesting. So now the more proactive side. The broker,
correct.
Broker calling you. Not with a margin call, though, which is nice, but maybe just a little bit of a heads up.
Trying to get in front of it.
Oh, yeah,
exactly.
That's a good thing. You want to be proactive these days. You don't want to have a client blow out or maybe have something happen to them they weren't aware because they were off on vacation, whatever. I don't know. My calls are coming due at this time. Interesting stuff. Mr. Rock Lobster, if you would be so kind, sir, why don't you walk Mr. or perhaps Mrs. JLN84 through this process we're talking about now called automatic exercise. What does he have to do if he bought these calls and is going his way?
Well, if you bought the calls and they're going his way, you could always just sell them.
Heresy, sir. let it go to expiration and come again.
Go the easy route. So what I have to do is you have to look at what the call's worth, add it to the strike, and say, okay, that's where I am effectively buying the underlying. Where is the underlying trading down? Do I want to own the underlying? Sometimes the answer is just, I'm just going to sell the calls out. So you need to have I know we say this all the time and it gets really tiresome, but you need to have a plan for your call. If your plan was just to buy a call for $1, it goes to $5, and then exercise, and exercise the call and keep the capital gain, which you're probably going to have to pay taxes on. Sure, go ahead and knock yourself out. It is a strange use of options for me to take the options and turn them into stock, buying a long call, because then you lose all the leverage of buying the options. So, again, that's a little head scratcher because that's the opposite way that I normally do it, but maybe it's the right way to do it. Who knows? You buy a call and you add to the strike price, and that is where you effectively buy the stock. So are you really up money? Are you gaining? You might be in the money, but are you actually making money? So you have to look at those things and really see, if exercising the call, every time you do that, synthetically you sell a put. So you've increased your risk like
Kevin said there, quite a bit from just buying a call for $100. Now you have $10,000 of margin and all-in risk. So be careful, listener, and be careful trying things of that nature is all I'm going to say. I don't like adding extra risk using options. I like to use them to reduce risk.
Look at you raining all over JLN's parade. They're all excited. They're in the money, and you're just poo-pooing them left, right, and center, sir. There you go.
That's my job as the grand poo-pooer.
The poo-pooer in chief. Before we get more of that, let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, and here we are for our final Around the Block of 2016 as we peer ahead into the misty fog that is the future and what 2017 holds in store. Not a heck of a lot left on the old calendar here for 2016. As you might imagine, not a lot of big numbers scheduled to come out here in the final days of the year. You know, you got a few numbers here, pending home sales, consumer confidence, aside, nothing really hugely market moving. That said, something is causing a little bit of interesting vol to come back into the market a little bit, so maybe something to keep an eye on there. Perhaps people bracing themselves for a potentially tumultuous next week. Maybe the Rock Lobster was right. Maybe it is the Fed, even though the Fed kind of just did their song and their song and dance routine. I'd be surprised if they were going to change it up yet again, but you never know. That said, let's go around the horn one last time here. Starting with you. Let's start with you, Kevin, because you are indeed our guest. I know it's a quiet week. Anything really worthy of note on your radar throughout the rest of the week into this weekend here, this final weekend of 2016?
No, nothing noteworthy. As a broker, we're keeping an eye on our customers and the risk levels going into the end of the year. Just watching to get ready for next week is really kind of where we're at this week. You know, we've got no doubt there's a lot of people not at work, some thin staffs on some desks, but we've got our risk desk fully occupied, and that's what we're focusing on. Keep things tight on a personal level. A lot of playoff NFL picture coming clear this week. Go Packers, as well as bowl games. So it's exciting.
All right, and you, Uncle Mike, if your Skype gods are still smiling upon you, what are you watching for the rest of this week into the weekend, sir, if anything?
Well, just to add on the football note, sometimes if you're on defense and the other team, it's 4th and 1 for the other team, you start saying, well, watch the dive. Well, watch the sweep. Watch the pass, watch the play action. And then you just might as well say, watch everything. And I think that tomorrow, not so much, but in the coming weeks, I say, watch everything. In that we have China rallying, we have the news with Trump and Russia, we have volatility that's happening, we have gold that went up a little bit today. We have just a lot of potential for news over the course of the next couple weeks. So just, I would say in terms of what I'm watching everything. And excited about the new year, as always.
And last but not least, Grand Uncle Umbrage / Poo Poo Pants, Mr. Rock Lobster. What are you watching for the rest of the year, sir?
Okay, that has to be the most convoluted title ever for me.
That's a pretty good one.
Grand Poo Poo Pants. All right, that Sebastian will get a kick out of that. The problem is he's going to use that now. All right, anyway, what am I watching? Mostly is the little run in VIX. It's hard to believe. It reminds me of like trading the SPX in like 1994 or something. Woohoo! VIX is up. You know, the vol at the money is up to 13, and everybody used to sell that. You know, now VIX is 13, and everybody buys it. So it's a different universe. And why is the vol rallying? The only other vol really, you got a little bit of hop from gold, you got a little bit of hop from interest rate products. So that's, you know, I'm going to see if that comes to fruition. However, the number one indicator usually for me is volatility of vol. So VVIX, stuff like that is pretty low. You know, Jan vol's it's in the high 80s. It is not at, I would say, a very expensive level. You know, with VIX where it is, it shouldn't be. But
It is, it's a little higher. The market's kind of moving a little bit. Today, notwithstanding, so I think mostly we're setting up. It seems like volatility is looking for a drop, even if we don't get one. So we'll see how long that put premium holds. It's almost like the market's trying to. People are trying to aggressively sort of hedge, but they don't want to sell their long. So what do? They buy puts and they wait. So that also has the funky effect of pushing vol up while the market really doesn't rally a whole lot. So it kind of looks like that's what's happening, and maybe after Wednesday it will all be for naught. So sometimes you got to just keep looking around the corner to the calendar, because the calendar affects volatility quite a bit. So that's what I'm looking at.
Buy puts and wait. Somehow it's not going to be the sexiest of titles, I think, for your next weighty tome, sir. So we'll have to leave it there. The music is calling us home. That's going to do it for this episode. Indeed, this year of the Option Block. Hard to believe it's come to an end already, but that is indeed 2016 in the record books for the old Option Block program. But one last time, let's check back in each of my cohorts here, starting with our guest Kevin, who has been on the show so patiently here today. Kevin, we mentioned at the top of the show, but repeat it here for our listeners. If they're intrigued with what you're talking about here, they want to check out more about Lightspeed Financial, where should they go? What should they do? Online, Twitter, social media, have at it, sir. The floor is yours.
It's out at lightspeed.com. We're on the social media channels. There's links there. Check us out. Would appreciate it.
There you go. Let's look for them. They're LS Financial on Twitter, and I think StockTwits as well, so you can find them there as well. I know a lot of our audience is very active on Twitter. So check them out there if you are indeed so inclined. And Uncle Mike, what's cooking for this final push here in 2016 in the realm of all things RCM, alts, and going long?
And going long. Well, if you are interested in working with a financial advisor, feel free to contact me, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. If you want to learn a little bit more about me, buy my book. It's for less than, not quite, normally I'd say less than the commission of most brokers, but with our guest on the show today, I can't quite say that, but it is still less than the cost of a Starbucks. Go long, new option strategies for buy and hold investors. It is available on Amazon Kindle.
And last but not least, Mr. Pooper Pants, what is going on in the realm of the pit here for the final week of the year, if anything?
If this was on the Seaway and you called me Mr. Poopy Pants, I'd probably kill you. But since I'm old and I'm mellowed, and I could be a little poopy pants sometimes. But other than that, our new vol class will be starting in January. If you want to learn how to trade vol, it'll be a 10-part class, and when you're done, you will know how to trade it. You will understand how it works, how the vol products work. You will understand, and people won't be pulling the wool over your eyes anymore. So, if you like all the yakking on this program, we do it a little bit more rigorously at Option Pit when we do our education. So there you go. Go to our website and look for Vol Masterclass.
Vol Masterclass, optionpit.com to learn more. And on behalf of the Rock Lobster and Uncle Mike and our guest Kevin, and indeed myself, I want to thank you guys for tuning in throughout 2016. It's been an epic year. We added the live component, and a lot of you guys love that here on the old Option Block. So look forward to more of that, and look forward to many more fun episodes in 2017.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.